Reporting on compliance. Reporting on compliance. Here we are referring to the auditor reporting on the compliance status of the company that is auditing, also known as compliance auditing. Now, compliance auditing is a specialized area of auditing that focuses on assessing an entity's adherence to specific laws, regulations, industry standards, and even a company's its own policies. So the auditor may be required to report on compliance status. Does the company adhere to specific laws, regulations, industry standards, its own accounting policies? So it is often required for entities. It is always, let me put it this way, it is a requirement for companies in highly regulated industries such as banking, insurance, healthcare, and so on. The auditor has to give a report on compliance. You understand? So, apart from just giving an opinion on the financial statements of an entity, the auditor may be required to do what we call compliance auditing. Look at the company's adherence to laws. You get the meaning? So then, what would be the considerations when reporting on compliance? If you are to report on a company's compliance, what are the considerations? One is a scope. Before you embark on compliance auditing, the scope has to be clearly defined. Clearly define the scope of compliance audit, including the specific laws, the regulations being assessed, and so on. So you have to put down all the laws that the company is required to adhere to, get the scope. Then materiality is another consideration. Evaluate the materiality of any non-compliance, because candidates non-compliance may come at a cost. So identify the materiality of non-compliance. So we all know that companies operate in highly regulated environments. Failure to adhere to laws comes with what we call compliance risks. So the auditor has to evaluate the materiality of non-compliance. Evidence, the third aspect, evidence. If you are to do compliance reporting, then you have to obtain sufficient appropriate evidence to support audit conclusions on compliance. Evidence. Then we have reporting. You have to consider reporting requirements. Reporting requirements. The auditor has to determine the specific reporting requirements for the industry or requirements laid out by regulatory bodies. You understand? consideration: scope of compliance auditing, materiality, evidence, reporting requirements. And the candidates, there are two types of compliance reports. Generally speaking, there are two types of compliance reports. We have the direct and indirect. Direct and indirect. There are two types of compliance reports. Direct reports, where the auditor expresses an opinion on the entity's compliance with specific laws and regulations. In an indirect compliance report, the auditor provides information on the entity's compliance with laws and regulations as part of their audit of the financial statements. As part of their audit of the financial statements. You get the difference? As part of their audit of the financial statements. So apart from giving an opinion on the financial statements, the auditor also has to provide a compliance report. So candidates, we are discussing compliance auditing at the reporting stage. At the reporting stage. So a compliance report will, just like any other audit report, will have an opinion, it will have a scope, it will have findings, and even recommendations. But most importantly, a compliance report is a specialized area that requires specific knowledge and expertise. And therefore, the auditor should ensure that they have the necessary qualifications and experience to perform such engagements. Are we clear on that? Still on reporting on compliance and other information, for the subtopic here is reporting on compliance and other information. We have the chairman's statement and director's report. Chairman's statement and director's report. At the conclusion of an audit, the auditor is also required to evaluate the chairman's statement and the director's report. But first of all, what is this chairman's report? What is a chairman's report? What is a director's report? The auditor is required also to provide an opinion on the chairman's statement and the director's report. But what is a chairman's statement? Now, the chairman's statement is, to put it plainly, it is a narrative report that provides an overview of the entity's performance, strategies, and future prospects. Chairman's statement is a narrative report that gives the entity's strategic direction, performance, and what else? There's a third thing. Strategic direction, it will come to my mind. So it is a chairman's statement in a narrative. It is in a narrative form. The report is in a narrative form that gives the entities, first of all, strategic direction. Then you have performance, yes, and future prospects. So at the end of the accounting period, a chairman is required to issue a statement. This is a chairman of the board of directors. The chair of the board of directors has to give a statement. And this statement, we are calling chairman's statement, has to be included in the annual report along with the financial statements. It's included in the annual report along with the financial statements. That is the chairman's statement. So here we are discussing the chairman's statement and director's report, and say that auditors, at the conclusion stage of an audit, auditors are required to provide an opinion on the chairman's statement. The chairman issues a statement at the end of the accounting period where the chairman highlights the company's strategic direction, we have the company's performance and future prospects. And this statement has to be included in the annual report along with other financial statements. You understand? So auditors are generally not required candidates to provide an opinion, generally speaking. Generally speaking, auditors are not legally required to give an opinion on the chairman's statement. But they may be asked to review this statement for consistency with the financial statements and for any material misstatements or any inconsistencies, because the chairman may, in providing this statement, provide information that is not consistent with the financial statements. So that's why the auditor, though generally is not required to give an opinion on the chairman's statement, there are times when he may be asked to do so. So it's important to note that it is not a legal requirement. It is not a requirement that the auditor provides an opinion on the chairman's statement, but at times when he may be called upon to do so. So candidates, as we are discussing the chairman's statement, it should not be lost on you that we are discussing the topic concluding and reporting. At the concluding and reporting stage, this is what happens. The chairman has to develop a statement. Now, when reviewing the chairman's statement, this is the most important question for us here, because you are to take the position of the external auditor. And that is the position of even your examiner. For those of you who are doing exams, if you are studying the chairman's statement, concluding chairman's statement, what is important here for you is to assume the role of the external auditor. If you are to give an opinion on the chairman's statement, then what are some of the things that you may consider? That's what's most important here for you. Now, considerations. Assume the role of the external auditor. But I think I gave you a hint on the considerations, what you ought to consider when reviewing the chairman's statement. One is consistency with financial statements. Consistency with financial statements. The chairman's statement has to be consistent with the financial statements. So when reviewing the chairman's statement, the external auditor has to ensure that the chairman's statement is consistent with the financial statements and the auditor's opinion. It has to be consistent. 2, check for any material misstatements. When reviewing the chairman's report as an external auditor, you have to check for any material misstatements. Identify any material misstatements or inconsistencies in the chairman's statement. 3, we have disclosure requirements. Disclosure requirements. Disclosure requirements. The external auditor has to verify that the chairman's statement complies with applicable disclosure requirements. What does the law say that the chairman's statement should contain? So there has to be disclosure requirements that are met. Then, of course, you can look at the overall presentation. Overall presentation. Now, overall presentation here, the auditor looks for clarity, objectivity, and relevance. So when reviewing the chairman's report, you have to assess the overall presentation of the statement. I mean the chairman's statement, including the clarity, objectivity, and relevance. And if the auditor identifies any significant issues with the chairman's statement, the auditor should discuss such issues with management and consider whether they need to be disclosed in the audit report. So if there are issues that the auditor identifies or inconsistencies in this chairman's statement, then that has to be discussed with the management and a decision be made whether such discrepancies or inconsistencies or the material misstatements in the chairman's statement could be or should be included in the audit report. So that is the chairman's statement. The same can be said in relation to the director's report. Director's report. Maybe we need to mention something about the director's report. Director's report. Director's report. Before that, is there any question on the chairman's statement? And here this is the chairman of the board of directors. We've said that is part of the annual report. It is a key component of the company's annual report. The director's report also is a vital component of the company's annual report, and it provides shareholders and other stakeholders with comprehensive overview of the company's performance, financial position, future prospects. Now, the chairman's report primarily provides high-level overview of the entity's performance and strategies and future prospects. And I've said it is written by the chairman of the board of directors. But the director's report provides a more detailed overview of the company's performance, financial results, risk management, and governance. So the director's report is more detailed. The issues are the same, but the director's reports go into details. It's more detailed. It is a more detailed report to give the specifics. But the chairman's statement is just a high-level statement. It is an overview. But the director's report provides detailed overview. Detailed overview. Do you get the difference? The chairman's statement, I repeat, the chairman's statement is a high-level overview, but a director's report is a more detailed overview. It is more formal and factual. It is more formal and factual. The director's report is more formal and it's factual. And it follows a structured format that includes specific disclosures that are required by regulations. It has specific disclosures. Specific disclosures. Do you get the difference? It is prepared by the board of directors as a whole, the whole board. You get it? This one is prepared by the chairman alone, but the director's report is prepared by the board as a whole, directors, including the chairman. So it is more detailed, it is more factual, and it gives specific disclosures as required by regulations. So both candidates' reports provide information about the entity's performance, and while both provide information about the entity's performance, the chairman's report offers a broader and more strategic perspective, while the director's report delves deeper into specific aspects of the entity's operations, entity's operations, and even governance. But sometimes candidates in some jurisdictions, these two are just combined into one. There are times when they are separated, but they may also be combined just into one, into a single document. And I've said that while the auditors are generally not required to provide a formal opinion of the chairman's statement of or even director's report, they may review the documents for consistency with the financial statements and for any material misstatements or to check the disclosure requirements, and just to look at it and ensure that the reports are and the statements are clear, concise, and all that. So all these considerations also apply to the director's report. The considerations for chairman's statements are just the same for the director's report.